Welcome. I greet you in the love and in the light of the one infinite creator. It's a quick video here, and I know I've talked about this on many occasions over the years. But let's take a look at Facebook here. And there's something that can be said about the recent price behavior, especially if you understand a very simple, powerful number, which is RSI 30.9. Now, just to explain it quickly, you can arrive at 30.9 from many angles, but the easiest ways to do this is just 61.8 divided by 2. Of course, you end up with RSI 30.9. Now, if you understand this basic understanding, and this is my own researched method, so I for sure understand it, and I've watched it over many years, and I've made videos spanning 15 years or so about this. Once Facebook dropped below RSI 30.9, and this is this period here, about 240, 230, prices have drifted lower. And this is a characteristic of the RSI holding below 30.9. Now, there's another added aspect to this, which is the following. Because we've spent a considerable amount of time below RSI 30.9, there is a likelihood, more often than not, there's going to be a recovery out of this area. Prices are going to make a lower or a higher low and look like that. But what it's going to suggest also is prices are going to recover at some point, and they're going to have to make lower lows. Why? Because this is how you end up with positive divergence. And this positive divergence, this buildup of energy, is needed to move higher. So not only is it a trap below RSI 30.9, it is also giving you a lot of information because of the amount of time that the stock has spent below 30.9, that there is a probability very high that there's going to be a bounce at some point, but you're going to make lower lows. Now, this is the daily. If you take a look, and before we take a look at the weekly, on this daily chart, and I believe I've talked about this, take a look at where the RSI stalled. Right there. And it also happens to be another area where we have uniform activity at that RSI 50 on the daily. Now, if you take a look at the weekly, again, the RSI on the weekly, this is a really bearish setup here. Once the RSI dropped below 30.9 on the weekly, this was now increasing the odds for prices to be sideways or down. And of course, we can see the stock chose this path of downward action. And the fact that we've been below 30.9 for a couple of weeks now, almost a month or so, suggests to me that even with a recovery at some point, there's going to be lower lows. Why? Because it's the only way you can have a buildup of the RSI where you have lower prices, improving technicals, and ultimately lower lows is where you can get the possibility of a sustained bounce. Now, one quick other observation. If you take a look at the monthly chart, and I talk about this a lot, there is also this area where we see the RSI dropping below 38.2, in this case for the first time ever. If it's been many years since you dropped below 30.2, this move below 30.2, especially for the first time ever, is always gonna feel like a crash. And there are gonna be links in the description of this video. I discuss all of these RSI levels because if you merge them together, it's a complex dance. I acknowledge that, and we all acknowledge that. Very complex dance. But if you merge all these RSI levels together, it paints a picture of what the energies are intending to do, or what the odds are for things to play out one way or the other. I am Eric Muathe with Muathe.com, and I leave you as I found you, in the love and in the light of the one infinite creator. Go forth, therefore, rejoicing in the power and in the peace of the one creator. Adonai, my friends. Adonai.